Chapter 16. Patience, the ultimate financial superpower. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. If you could have just one trait as an investor, it wouldn't be intelligence, not timing, not luck, not even strategy. It would be patience. Because in the long run, patience beats brilliance. It's the defining strength of the quiet investor. Why patience wins. The market doesn't reward the quickest. It rewards the most consistent. You don't need to predict the next big thing, jump in and out at the perfect time, or read every headline. What you do need is to keep investing, stay the course, let time do the work, because time in the market always beats timing the market. Compounding, patience in action. Patience is what unlocks the full power of compounding. Let's say you invest $10,000 at an 8% annual return. In 10 years, it becomes $21,589. In 20 years, $46,610. In 30 years, $100,627. The biggest growth happens later, not because you invest more, but because you wait longer. Most investors fail to build wealth because they quit too soon. The temptation to chase. Impatience shows up like this: switching strategies every year, selling when the market dips, chasing the latest hot stock, comparing your returns to others. Each move feels urgent, but each one cuts the roots of your wealth building machine. Compounding consistency. The quiet investor? They ignore the noise and refuse to rush. Case study: the janitor millionaire. Meet Ronald Reed, a janitor, a gas station attendant. When he passed away, he left behind over $8 million. He didn't win the lottery. He didn't invent an app. He didn't make headlines. He simply lived below his means, invested in dividend-paying stocks, held them for decades, and let time and patience do the rest. That's the power of quiet, patient investing. The markets reward the boring. You don't need to reinvent the wheel. In fact, the more boring your approach, the better. Think broad index funds, dollar cost averaging, annual rebalancing, long holding periods, while others flinch, pivot, and panic. You wait, and waiting is where the wealth is. How to build patience. 1. Focus on decades, not days. Ask yourself, will this matter in 10 years? 2. Zoom out your perspective. A 20% drop today looks tiny on a 30-year chart. 3. Avoid constant checking. The more you watch, the more tempted you are to act. 4. Celebrate consistency, not novelty. Did you contribute this month? That's a win. 5. Learn from history. The market has always recovered and rewarded those who stayed. Key takeaways. Patience is what turns good decisions into great results. Compounding only works if you give it time. The market rewards consistency, not cleverness. Quiet investors know waiting is winning. So stay steady and let time be your partner.